Namaste everyone, this is Rupi Raja and today I will do the IPO review for Belrise Industries. Talking about the company Belrise Industries Ltd or formerly known as Bardway Engineering is a key automotive component manufacturer in India specializing in safety critical system and engineering solutions for two-wheelers, three-wheelers, four-wheelers, commercial vehicles and white goods industries. The company has a diversified product portfolio including chassis, suspension, braking systems, and other precision engineered components. The company serves major original equipment manufacturers and has a strong presence in the automotive and white goods sectors, benefiting from India's growing automotive industry. So, in other words, this company manufactures all the auto auxiliary equipments of an automobile. So the minimum investment amount for retail investor varies between 14,110 rupees to 14,940 rupees. Talking about the issue dates for the IPO, this IPO will open on May 21, 2025 and it will close on May 23rd, 2025. The allotment date for the company shares will be on May 26, 2025 and the listing date will be on May 28, 2025. Talking about the share reservation and objectives of the IPO, the qualified institutional buyers have a share reservation of 50%, non-institutional investors have a share reservation of 15%, and retail investors have a share reservation of 35%. Talking about the objectives of the issue, 1618 crore will be used for repayment or prepayment in full or in part of certain outstanding borrowings and loans availed by the company, and the remaining 532 crore will be used for general corporate purposes, and it is not clear what exactly this 532 crore will be used exactly for, and it is not given in clear in the DHRP or the draft red herring prospectus of the company. The company operates 15 manufacturing facilities across 9 cities in 8 states of India. Talking about financial performance of the company, the revenue of the company showed 14.1% year-on-year growth in financial year 2024 to 2025, and the profit after tax showed a decline of -1% year-on-year in financial year 2024 to 2025. Talking about the valuation of the company, the post-IPO price to earning ratio of the company comes to be 24.8, and it is optimal valuations. So, since this company is not undervalued, I will not apply for this IPO. You can see the cash flow statement of the company and it appears okay. There has not been major issues regarding the cash flow documentation. Talking about my personal opinion, I will avoid this IPO because retail investors should avoid this IPO since this company operates in a fragmented auto auxiliary sector. There is high competition in the sector and the company invests just 57 lakhs in research and R&D in the latest financial year. This IPO appears good for short-term traders, but for a long-term investors like me, I will wait and see how does the auto auxiliary sector evolves. As of now, I do not have good knowledge of the auto auxiliary sector, and as a result of which I will avoid this IPO. The company although enjoys around 24% market share in the two-wheeler segment and it is quite good. Talking about debt to equity ratio of the company, in the latest financials it was around 0.97, but if you see the historic valuation of debt to equity ratio of the company, it was between 1.31 to 1.63 in the previous years. So I found that this company has a lot of debt in the past, and for now I will avoid this IPO because this company has a lot of debt. I will avoid this IPO not because of my lack of knowledge in the auto auxiliary sector, but also that this company had a lot of debt in the past, and as of now, though the company focuses on reducing its debt, I will wait and watch how the auto auxiliary sector evolves. If you're a long-term investor, then you should skip this IPO, and if you're a short-term investor or a trader, then also you should skip this IPO because it is not attractive for short-term trading. Even though some people might say that gray market premium is good for this company, I will say that gray market premium is not always reliable. So as a result of which, you should avoid this IPO. If you want to read about the DHRP document of the company that every company files before its IPO, you can go to this link in the description section and see how the company works and what is the sector scenario. So that's all for today's IPO review. I encourage you to dive into the red herring prospectus, monitor subscription trends, and comment your opinion if this IPO aligns with your investment goals. Stay informed, invest wisely, and we'll see you in the next video for more market insights. If you want to book any consultation related to investment, mutual fund advice, or stock advice, honestly, do not worry about it. Just type your questions in the comment section and I will try to reply to your query. As of now, it will be free of cost. Before ending the video, I would like to put the disclaimer that this is not a financial advice. I have included this disclaimer that this is not a financial advice to clarify that my content is for informational and educational purposes only. While I share my analysis perspectives on stocks and mutual funds, I am not a certified financial advisor and everyone's financial situation is unique. This disclaimer ensures you understand that any investment decision should be based on your own research or guidance from a licensed professional, as equity markets carry risk. It's all about keeping things transparent and encouraging responsible investing. So, hope you like this IPO review. Thank you. This is Rupi Raja.